all you wonderful money masters and treasure hunters. Welcome to the May 30th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. In fact, today's tools, they're just simply in honor of Ed Young, a tiger that will forever be watching over each of us. The tool goes like this: by their fruits you shall know them. You know, folks, we can realize how rich we are when we pause to count our blessings. The wonderful substance of the universe flows in and through each of us and extends from us in every direction. Truly, there is no place we can go where we are not bathed in the infinite sea of abundance of this great universe. And this great universe provided us with the likes of Ed Young. Yes, you will know them by the fruits. And the fruits of Ed Young included his love, his joy, his peace, his patience, his kindness, his goodness, his gentleness out there. They will be forever missed. Love has been called our human rose, and perhaps the most beautiful flower in the garden is the rose, and if so, Ed was the head rose out there. The inner quality that beholds good everywhere and in everyone. And oh, what a joy Ed brought to each of us. For he blessed with such gifts, incalculable gifts of joy and gladness that just simply created peace within each of us. And for Ed, he was the calm of our soul, who had the powerful attitude of the mind, so often characterized as the word poise or serenity or just inner calmness, the patience that each of us desire and need. We need patience. That creates that gentle expression of love and kindness, for there could be no gentler soul than that of Ed Young. By their fruits you shall know them. Man is man because he's free to operate within the framework of his own destiny. He's free to deliberate, to make decisions, and to choose between the alternative that he sees fit. You and I. Well, this is distinguished. Man is distinguished from animals just simply by our freedom to do evil or to do good and to walk the high road of beauty. Yes, Ed Young, he chose to do good, and he paved a beautiful road for each of us. Ed Young, may you forever rest in peace out there. We lost a good soul. Folks, let's go take a look at these markets here. Right now, pretty flat out here. We've got the Dow futures up 3 points, trading at 15,923. ES Mini trading at 1648. That's up a point right now. We've got the NASDAQ futures, they're flat, trading at 29.96. Russell 2000, pretty flat as well. U.S. dollar index, again, a little bit of a delayed feed out here. I've got the King back by 20 cents, trading at 83.50. I will take a look at the currency market. We've got the euro up about 47 ticks right now. Gold, though, might have me turning into being a believer today. We'll see how it closes. Right now, trading at 14.06. That's up $15 and change. Silver on the move as well. That's up 30 cents right now. Trading out at 22.76. Light sweet crude down $1.27, trade at 91.85. Our call-in number is 877-927-6648. If we take a brief look across the pond here, we'll start off by looking over in Europe. The DAX is up 41 points, trading at 83.78. The FTSE's up 10 points, so no big shakes out there. Of course, over in Asia last night, truly a bloodbath. A sea of red out there. The Nikkei down 737 points. That was off 5% last night, but off of its highs, folks. And here's where a market can take back so quickly that which it has given, I suppose, not gave. But, the Nikkei in 6 trading sessions is down 15%. We'll go take a look at that. Looks like there is further to go in the Nikkei out there. You also, relatively flat. The Shanghai was down. Let's see, Shanghai was off 0.25%. That was down 6 points. The Hang Seng off just over 0.25%. That was down 70. Let's start off by taking a look here at the ES Mini. Let's go see what the futures markets are doing. Yesterday as the markets were moving down, we were taking a look here coming into the 11:30 hour during Basil's hour. And Basil's going to be coming to us live from Newton, I believe. So that is going to be great. great. He's out there. He's going to be educating all kinds of tigers and tigresses. And I read that he's got his Fig Newtons out there, which is a wonderful thing. Actually, one of my favorite cookies. Can you call a Fig Newton a cookie out there? I guess right next to chocolate chip. It's if I go into if I'm looking just for a little quick nourishment and I go into one of those, gas station fast food operations out there, I actually go look for the Fig Newtons. In any event, let's go take a look here at the ES Mini. If you're watching us on Tiger TV, what you can see here is my screen. Maybe you're just simply listening in on the radio or your mobile device at TFNN.mobi. Thank you so much for doing that. You can always catch the archive of this show on Channel 9. And remember, the show will stream live to you on your mobile device. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see that button, 3 little smartphones on it. Click on it. You'll get this show streaming live. You'll see the chart we're looking at on my screen, or better yet, just go sign up for the Tigers Den. You'll be able to see these charts in HD out here. Now, you're seeing a pattern that I've got drawn on my screen. It looks to me like the ES Mini still is not done moving to the upside here. It is trading a bit lower. It started to get, well, let's start off with yesterday coming in at 11:30. So at 11:30 a.m., you had the ES Mini get down to a price level of 1638. As it was doing that, actually did form a bullish reversal signal out there. It was called a piercing candle. That piercing candle, if we go over to our left, there were a number of different patterns that were actually forming as the price was moving down into the low of 1638 out here. And here's where you can put a number of different techniques together. Some of those techniques are first just understanding where is it, being able to look at any chart and being able to identify where is it that the bulls or bears are hanging out. Now remember, when you're trading or if you're looking at an intraday chart, it's only giving you the message, in this case here on a 30-minute chart, of where the bulls and bears are hanging out on a 30-minute chart. I find the 30-minute chart to be the best EKG of where the market is going up and down, where you just see those normal patterns. And we can take a look at that by utilizing several different tools. One, if you look at my screen here, you're going to see some yellow and some blue shaded areas. Those are either Gartley buy-sell patterns or they are butterfly buy or sell patterns right now. As price was moving down yesterday, it was also forming a 1.272 expansion of a set of swing points. That was a 1.272 butterfly that was in the 1637-ish area. Again, yesterday, price got down to 1638. If you go to the left-hand side of the chart, and we took a look at this yesterday, we know that it's always important for us to understand where the defended positions of bulls and bears are. In this case here, the bulls are defending the position where they created that hammer candle at 10:30 in the morning on May 24th. That was on Friday. That was as the market was certainly pushing down, got down to 1637.75. If you went back a little further on the chart, you would see 2 Morningstar candles. So we know that this area, you don't have to, you're not really paying attention of tick for tick, the exact number. It's really the general area, because if you're going to go ahead and buy a market or you're going to sell a market, you're not trying to sell the top tick, although every now and then you might get fortunate enough to do it. You just consider that to be more of a lightning bolt that just struck as opposed to any type of real skill out there, in my opinion. And I think it's always better to let the market tell you what it wants to do, and that's why you're looking for these bullish and or bearish reversal signals. Well, as the market was pushing down yesterday morning at 11:30, as we were, in fact, it was just before that where it truly had gotten into that oversold territory, getting down to that 30.88 level inside that relative strength indicator. So you had the butterfly pattern, you had a piercing candle. We were coming against other territories where the bulls were hanging out. It only made sense that we were going to go ahead and see some type of bounce in the marketplace. Why a bounce? Well, a bounce, or at least a move sideways, in order to work off that oversold condition. It's only 2 ways to be able to do that. In this case here, we got some additional follow-through on that 12 o'clock session. That really set up the move higher that we have seen so far. We have seen a move 7:30 this morning, as well as we came in at the 9 o'clock hour. We did see a high of 1654.75 in the ES Mini. It does look like to me what the ES Mini wants to do at some point in time during the show. Maybe it'll be during the next couple of hours here. We'll see a move into that 1659 level. That will set up the Gartley sell. That would set up by 0.618. Gartley probably sell. Nice Fibonacci numbers that we have up there. In fact, if you're looking at the screen, you're seeing the retracement that took place this morning at 3 a.m. as the ES Mini moved back to 1641, formed a little hammer candle. In fact, there was a hammer candle on the single candle at 3 o'clock. The very next trading session that finished on the 30-minute chart at 3:30 formed that three session candle that is referred to as the Morning Star. So we know where the bulls are hanging out. We can just simply see it with regard to candles out here. And right now they're going to be defending that position. Well, I'd say the low of the defense is going to be down at about the 1632.75 level. Now, the market has most certainly worked off that bought condition, or close to that overbought condition as we came into the 9 o'clock opening here. But it really does look to me like the ES Mini wants to go ahead and complete this pattern. Now, just because let's assume it gets up to 1659. If that 1659, 1660 or so, is that the place where you would go ahead and put on a short position? Absolutely not. You would wait in order for the Bears to tell you that they are ready to resume control. And by the way, folks, in this game out here, and we'll call it the football game, and we'll take a look at the New York Stock Exchange. In order for the Bulls to actually resume control of the marketplace today, they would have to have more than 3,597 net advancing issues on the New York Stock Exchange. The Bears have the ball today, and no matter what takes place in the market, I don't even know if there could be 3,597 issues. The Bears have control of the game today. So any bounces that we would see, whether it's 1659 or 1665, the Bears are firmly entrenched in this marketplace. 877-927-6648. We get back, we'll go take a look at Goldilocks out here, up $17 right now, and maybe getting over that swing point that says, something to think about.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking Looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, let's go take a look in at gold. We've got a trade out at $14.1270 out here. And if we take a look at this here, I've got the weekly chart up on my screen, so I'm starting to become potentially a believer out here, but I'm going to have to get my head wrapped around the U.S. dollar index, what it may do, and gold, because, you know, so on the weekly chart, we've got the weekly chart, and the reason why I pull the weekly chart up here is because we know, I just simply want to point it out to you again, is that the commitment of traders, the large commercials out there, you know, they are at their historic, at least when you go back and take a look at the CFTC data, they're at historic net, their lowest net short positions out here in the marketplace. So the large commercials out there, they are taking a look at gold forming a serious bottom in the marketplace. And likewise, we've got the individual, the non-reportables. They're at their largest net short. So they're in one side of the boat. In fact, you know, in their side of the boat, that's not the side of the boat that you want to be in. They're usually wrong over the longer haul. They'll stay at the party longer. So this is the weekly chart. I just bring that up on the screen. I don't have it updated for last week's data, but there was not a substantial change in positions on either side out here. But if we come back and we take a look at the daily chart for gold, what we're going to see here today, and the day is not over, so we'll see how gold actually holds up today. But it has reared its head above that swing point, the swing point being April 16th. That's a swing point high of 1404.20 down to a low of 13.21. So, you know, you got a pretty decent margin out there. What's that, a little about $83 or so. But it is key, at least as I take a look at price, candlesticks out here, it is when you're trading inside a swing point, as long as you're inside a swing point, then you can go and test the, in this case here, the direction that it would be testing would be the low. That would be 13.21.50. But you break out of that swing point, and you break out of it and it says, okay, maybe in this case here, the low is in. And that's what we're waiting to see. That's what I'm waiting to see. You don't have to buy the bottom tick here. Now, just a normal bounce inside gold ought to take us up to 1535. So let's assume it closes over 1404 today here. You know, you could take a little stab on the long side here and just simply play that bounce. And that bounce, when I say 1535, I should say 1535-ish, because as I pull this back, that is the consolidation level that gold broke out of. It traveled inside that consolidation level going all the way back to September of 2011, and it did not break that consolidation until April of 2013. So it was in there for quite a period of time. Now, when you break a consolidation, what happens is the market will typically go back and see if it was real. It's going to go back and test it. It's going to try to get back inside that consolidation area. If it does get back inside a consolidation area, then it can be considered a false break to the, in this case here, it would be to the downside. And it can actually go up and it can test the highs again. The highs in gold would be 18. Now, proof of that is just simply, let's go take a look at bonds here. Let's pull up bonds. We'll look at a shorter-term chart out here. Let's see if I can... if I've got that consolidation level, I think because I've changed contracts here, I don't have that. But let me just put up this here. Yeah, there we go. Okay, so we've got bonds. So take a look at what bonds actually did here. So we had the consolidation level in bonds. This consolidation level going back to January 2nd of 2013. That price there was 144.09. That was the high of the consolidation. The low of the consolidation area, we'll just call it the low of February 4th, right around 140.23. But there's our consolidation level. We can see price moving inside that area. And then what happens is on April the 3rd, we have bonds break out of that consolidation level. Now, normally, when you break out a consolidation level, it's going to come back and test. In fact, from the bullish side, that's really what you want to see. This would be a breakout to the upside. But bonds didn't do that. Instead of actually coming back and testing that area, they went ahead and made their full price objective. Now, the full price objective is going to be equal to or greater than the actual consolidation. In the case of bonds, they went just slightly higher than that consolidation. Those two yellow boxes represent the same price objective or price differentiation out there. It's a great tool, easy way, because the markets are only going to do three things. Either they're going to go up, down, or sideways. And sideways action is also very important, because sideways action, when it breaks that, it gives you a price objective so that you can consider putting on a trade out here. Now, what happens is big downdraft day on May 3rd out here, but bonds came back and they tested that original consolidation level, and they got back inside it the very next session, which was on May 13th. And so often when you get back inside a consolidation level, what do? You can go all the way back and test where it broke out of. In this case here, bonds went all the way back down to the bottom. So if it works that way with bonds, I would just pose this to you. Why wouldn't it work the same way here with gold? So gold, if gold can stay above and close above today, this swing point from April 16th, who is this? Is it the Beatles? Is it the monkeys that say I'm a believer? I think it could be the monkeys. And I think, folks, I could be a believer. 1535 would be the target. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow down 12 points right now. S&P flat, up a buck. You've got Composite is up 8 points. Russell 2000 up 2.5. Google up 39 cents. Apple up $2 and change. Microsoft up 7 ticks. Intel up 2. Cisco down 4 pennies out here. Leading the charge the upside, we've got Priceline up $7. NV Energy, merger news or buyout news discussions by Warren Buffett out here. That's up 22%. A nice up $4 and change. First Solar FSLR up 7% this morning. That's up $3 and change. Avgo Technologies, AVGO, up 6%. Rand Gold Resources, GOLD, up 2.5%. We'll have to peek in on that. We've got Apple up $1.93. Lockheed Martin, LMT, up about 2%. We've got GLD is up. Express Inc., EXPR, they were out with earnings. Costco up as well. They were out with earnings. We'll take a look at those numbers. Michael Kors, we took a look at that stock chart yesterday. That was moving into a swing point with volume out here. To the downside, Big Lots, they also were out with numbers. We'll take a look at that. That's down $3.90 off 10% right now. Biogen, BIIB off $3. Not a big deal out there. Goldman Sachs back $1.73. Boardwalk Pipeline, BWP off $1.50. That's off nearly 5% here this morning. Tesla Motors off $1.83. Again, our call number is 877-927-6648. Light sweet crude trading out right now at $91.95. What's going to be under attack are two hammer candles out here. Those hammer candles being the May 15th low, $92.40. We're below that right now, as well as the hammer candle from May 23rd out there at $92.21. If these hammers fail, you know what the saying is. If you're long, you're wrong. And it has been a strong area of support in that price range, in that $92.20-ish range. If those areas fail, we'll see a move down to about $90, $89.89 would give you nice Fibonacci numbers, a 1.618 expansion, and just below the 0.618 retracement off of the move from the April 18th low, which was 86.16, all the way up to the high, put in at 97.35. But that may not be enough to hold it if these hammers, in fact, do not hold today. So we'll see how this trading session, but right now that is under attack in the marketplace. If we take a look at some of these equities here that were out with earnings, let's go see what they reported. We had Big Lots. Big Lots is trading down right now. Big Lots reported revenues here of, let's see, net sales $1.3 billion versus $1.29. I'm going to move over to the chart. We'll take a look at the chart here so I can find my cursor. There we go. As well, and they did net income of $32 million versus $40.7. BIG is the ticker symbol out here. So gapping down. It's got a little bit of volume behind the move, but let's take a look at Big Lots out here. Take a look at this high volume bar. Let me refresh my screen. Make sure I've got that all set. I most certainly do. So what's behind this move? Now, we'll go ahead and we'll take this high volume bar, not wide price spread, but you certainly do have accelerated volume. That's the trading session of February 13th out there. I don't know what was behind that 17 million shares, but it really doesn't matter. All you need to do is understand where those high volume bars are on any stock chart that you trade, because those are going to be the areas that if a stock does fall out of bed, that's going to be the area where it first targets. And if we take a look at that bar, that February 13th high was $34 even Steven. So far this morning, the low is $34.11 out there. So volume-wise, 665,000 shares in the first 8 minutes of trading. We'll see how that volume holds up. 17 million shares is on that day of February 13th. But looks right now like that area is going to hold. Now, let me do this. I ran the line along the bottom here. I'm going to pull that back. Now, let's blow this up on the chart here because we can see that this also broke out. So talk about the high volume bar out here. Again, not wide price spread, but just simply understanding that volume bar from February 13th with 17 million shares. We also see another small sign of strength inside Big Lots on March the 6th. March the 6th. You've got a move higher, gap higher, quite frankly, with 4.3 million shares. And then it just travels. You can see it moved up into the overbought territory. It needed to work that off, which it did by moving sideways. And it finally pulled back just slightly here. Again, BIG is the ticker symbol if you're following along on your charting software package out there. And I hope that charting software package is the art of the charts. If not, it should be. But we'll come back to that in a moment. Take a look at the move down on April 3rd here as it pulled back and continued to work off that overbought condition. Moved down with 1.1 million shares, going against the breakout with 2 million shares from March the 5th, as well as that high volume candle on February 13th, which was at $34. That level held. We saw a nice little bull sash candle that occurred here on April the 4th, and then just simply made a move higher. So this area where Big Lots has moved down into, you can see a very strong area of support in the marketplace. So even though it's gapped down here, it's going against a pretty high volume bar out there, and that should hold as support inside Big Lots. Of course, if we take a look at this and why it's consolidating the way that it is, let me just go ahead and remove a couple of things here from my screen to make it a little bit easier for you to take a look at. If we take a look at Big Lots, we can also see now, if we go back further to the left-hand side of the chart, which I hadn't done, you can take a look at the big downdraft that this thing had on August 23rd. So the prior trading session, which was the 22nd, closed at 38.84. 1.2 million shares, and then boom, maybe it was an earnings report August 23rd, almost a little over 16 million shares to the downside. So all that Big Lots did here 4 or 5 trading sessions ago was got back to the area where it had broken down. So what we're going to see here in Big Lots, we're going to see a little consolidation pattern. At consolidation high right now, well, the consolidation high is certainly where it broke down from on August 22nd. So you've got 16 million shares to the downside. You've got this high volume bar with no wide price spread, so I'm not exactly sure what that means, 17 million shares, but it's got support in here, so it looks like it's going to just simply consolidate in this range, and that range being about $39 down to the area of about $33.76. That is on Big Lots. BIG is the ticker symbol. Let's see, who do we have out with earnings as well here, bouncing around? Let's take a look at Express. EXPR is the ticker symbol. We'll go ahead and pull this back. Let's see what they reported here as their numbers. Let's see, they generated net income of $32 million versus $42, so a nice job there. Q1 net sales $508 versus $495, $495 million, I should say. Gapping up this morning Of course, this is going to run into some overhead resistance here. Let me pull off the moving averages on there and make it a little bit easier for you to see. We can always add those back in a couple clicks of a finger. So we're taking a look at Express. EXPR is the ticker symbol. EXPR. Let me make sure. EXPR it's right there in my upper left-hand corner. So gapping up this morning so far, volume about 1 million shares as it gets above this last area of resistance out here, which was really this May 20. We'll call it May 29th area. The high there, $19.42. Now this thing here gaps down on May 22nd with big volume, 17 million shares. I think Big Lots was doing the same with those 17 and 16 million share days here. So where is it that Express could be moving into? Well, certainly it could come all the way back to where it broke down. This would be like, it's like buying a breakout or selling a breakdown. So you would look for Express here to get back into the range of 22.54 to 23.29. If it gets up there and it's coming in there with less than 1.6 million shares, that would be a big heads up. You would also take a look here at the real benchmark is going to be your 17 million, but you want to be paying attention to the day where it broke down from, or even in buying a pullback, buying a breakout, you want to see what the volume is as it moves back into that area. Now, could this be something, a larger move out here? Yeah, it could. This thing has had gaps down, gaps up, so it's a little bit of a psycho stock out here. But off of the lows that were created here in November of 2012, what we have seen is basically two signs of strength, one sign of weakness out here. This could be setting up an A to B equals CD. That A to B equals CD on this equity here might look like that, and that says that it would get above the breakout session. So you'd really have to see volume come into this for this to get all the way back out to the highs back in March of 2012. So that is on Express out here. Take a look at all these gaps up and down in the volume bars that this thing has had. Very interesting. We had Joy Global also out with numbers. Let's go see what that stock is doing here in the marketplace. Used to be JOYG was the ticker symbol, but it's now just JOY. So let's go see if this thing is doing anything. Nah, not really, but as long as we got the stock chart up, let's take a look at what Joy Global is, in fact, doing. You've got a hammer, so it's got some support. It's trading into that hammer right now. That hammer candle was on April the 12th. Again, JOY, if you are watching this. Looks like it wants to trade and go back and test that level. You've got high volume down there, 6.6 million shares. You're coming into it. Yesterday you were into it with 2.5 million shares. Today so far, 565,000 shares. Let's see what Joy Global actually generated here. Let's see. Revenues were $1.36 billion versus $1.54, so struggling on the top line. Bottom line, net sales of net income of $181 million versus $213. So that's a part of the reason why Joy Global is selling off. But looks like Joy Global will come down and test the low right around 52.10 or lower. If it holds that area, that's 6.6 million shares, and that should be your area of support out here. We can also see this high volume bar that is trading into right now, which is the session from August 29th. That low out there is 49.65. So looks like some pretty decent support here inside Joy Global right into this area that it is trading into. Now, if it takes out the April 12th low, that hammer candle, right? It's a hammer candle. You close below it. If you're long, you're wrong out there. Now, if it were to take it out with more than 6 million shares, 6.7 million shares, you would form an A to B equals CD down. Now, it's going to find some support out here. It's last swing point, July 12, 2012, but it's only got 3.2 million shares there, and that low is 47.69. So if there were some volume to come out of this equity here, we would see another leg down inside of Joy Global out there. Let's see, what else was out with earnings? Costco, C-O-S-T, one of my favorite stores to shop at. C-O-S-T, where is it? I thought I had it up here, and I don't. So let's go put that up on the chart, see what it is doing. Give me a moment here to pull this up, C-O-S-T. Come on, baby. The delay. Okay, so Costco moving up a bit here this morning. Let's see what this is trading into and see what their numbers were as well. So COST, Costco generated $24 billion versus $22.2 billion from the prior year. Net income, $459 versus $386 million as well. So let's take a look at this. This thing is at all-time highs. Let's put this back on a longer-term chart. Let's take a look at the weekly chart for Costco out here. And 112.29 was we were just taking a look at expansions in this equity. So what a nice-looking equity. This thing comes public back in 2003, right around the $34 range out here. Came back in the 2009 lows, got down to the $38, and it's been a little rocket ship ever since then. If we take a look at not really a whole lot in the way of real, A to B equals CD patterns, of saying, well, never really retracing too much out here. So the question is, where is Costco going to? Where in the world is, what is it? Where in the world is what? Waldo? No, I don't know what the, that's actually not it. I tell you the truth, I take a look at the stock chart here, and I can't really tell you where this thing is going, but it is headed north. That's a Carmen, San Diego. Thank you, Al. Nothing like having a great man behind you in the booth here. So Costco is moving higher. Let's take a look. Out with earnings after the bell today, we're going to see Guess. Krispy Kreme, I believe, they were out with earnings today. How about that? That was this morning. Let me see. Let me make sure here. Krispy Kreme donuts. Maybe not. Maybe they are going to be after the bell out there. You guys like Krispy Kreme donuts? You ever had do you have Krispy Kreme donuts? I think they have them pretty much everywhere now. Now, in Florida, they started down here in Florida. I believe the first store was in Daytona Beach out there. And folks, if you're ever really looking for a sugar fix, well, that's the place to truly go. Now, the cool thing is, if you've ever been to a Krispy Kreme donuts where they're coming, one of their manufacturing plants, which is a retail store, where they're coming right off of the conveyor belt. I grew up in the Michigan area. Nothing like the fall when you go out to the cider mill, get a nice fresh glass of apple cider with a hot donut. Well, Krispy Kreme, you get those things coming off of the conveyor belt, and that's a pretty darn good donut out there. But too much sugar, way too much sugar. That's just like eating sugar out there. But they are most certainly good. In any event, they're going to be out with earnings after the bell, along with Guess, Lionsgate, Palo Alto Networks, and Splunk. So that's what to be looking at after the bell. In any event here, we're going to be headed into break. Let's go in and let's go check peeking on gold here one more time before we go to break. Let's see what that is doing here. If it continues its advance, it's trading at 1409.30. So watch today, a close above 1404.20, and I may be a believer in gold out here. Not that I don't believe in gold, but may end up being a trade. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow up 76 points right now, S&P up 10, Composite up 21, Russell 2000 up 7.5, and we've had the Euro has been up pretty big. We'll go check in on that. First, I've got the update on the ES Mini 30-minute chart here. We can see that the nice wide-ranging bar, good volume coming into it during this 30-minute session, still 6 minutes to go. You can see it is moving into that first target area of the 1660-ish range. It's been up as high so far here to a level of 1658. Now, it's coming into that 0.618 Gartley sell pattern. Is that the place where you would sell? As I said earlier, absolutely not. And you wouldn't do it now, especially with a wide-ranging bar coming into this level here. That doesn't mean that prices can't stop. Now, we can see here it has not gotten to the extreme area of being overbought just yet. So you're coming in with a wide-ranging bar. Taking a look at those bars is a really great piece of information. You come in with a wide-ranging bar. Markets do not usually end on wide-ranging bars. Now, we still have 5 minutes left in this trading session, so the bears could jump on top of this at any point in time if it were to end right here, right now, right at this bar. Take a look at that bar. If you take a look at the strength of a bar and you go ahead and measure things from 1 to 10, Right now, the bar that we're taking a look at would be a 2, with 1 being the strongest and, let's say, 10 being the weakest out here. Or you could flip it and say 9 being the strongest and 1 being the weakest. Either way, that's a strong bar, wide-ranging bar like that with some volume behind it. That says that what we should be looking for now is the 1665 area before we get any type of potential sell signal out there in the marketplace. That would be your 0.786 Gartley sell pattern, and that's what the message is at the moment. Again, about 4 minutes left in the trading session here. And popping in, dropping here in the marketplace right now. Price line leading the charge. That's up $20. And to the downside, we've got here, you got big lots really, other than you've got dust, which is the direction gold. That's down about 12%. CVI Energy. CVR Energy, and their ticker symbol is CVI out there. They're down about 10%. So let's go check in on that, see what that is actually doing. I don't see any type of news behind that. Again, the ticker symbol CVI, even though the name is CVR out here. So this is gapping down. Had some really nice volume the last 2 trading sessions, so something is going on here. This is down so far today with volume of 139,000 shares. Made a high yesterday and the day before with 1.7 and 1.2 million shares respectively, so not too shabby. But in the first half hour of trading, it's already got 140,000 shares to the downside. That says it's going to do that same million or so that it did to the upside here. So where will this move down to? No reason for this to not come all the way back down. Look at that volume on this thing. No reason for this thing to not come all the way back down to the recent swing point low of May 1st, right around $47.44 out there. I don't see anything else really stopping it in its way out here. Nice little, looks like a nice little hammer here right around the April 3rd time frame. Let's go peek in real quickly here on the currency pair. I did mention the euro, and the euro was up fairly large. I think we had a wide-ranging bar on its 30-minute chart out here, and that took place coming into the 9:30 session. So here's a wide-ranging bar similar to what we were looking at inside the ES Mini 30-minute chart out here. Markets do not end on bars like this. We can see here that the euro has made a 1-to-1 A to B equals CD pattern, and as it was completing that, it was doing it with a wide-ranging bar. It says the euro actually wants to move up to the 1.3055 level at 1.304. Looks like that's probably the 0.618 retracement level. So the euro is going to put some fuel in the market here today. Folks, stay tuned. The Money Master Show is up next. And if you're off to start your Thursday, just simply have an incredible day. I look forward to seeing you in the morning. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.